Hello everyone and welcome to this technical analysis video here at xm.com. Now, following a relatively quiet week in terms of economic data and releases this week, the attention will fall on three central bank interest rate decisions, and those banks are the Fed, the ECB and the Bank of Japan. Now, getting the ball rolling with the Fed, investors are nearly certain that a 25 basis points hike will be the case, but they also believe that this hike will be the last one in this tightening crusade. And they are also expecting a series of rate cuts throughout 2024. So the attention will fall on whether the Fed will signal more hikes this year and whether they will push again back on any rate cuts for next year. If the Fed sounds hawkish enough to convince the market that more hikes are on the table and that no cuts are on next year's agenda, then the dollar will strengthen and euro-dollar could extend the slide we are seeing below 110.95, perhaps testing the 110.10 territory marked by the inside swing high of June 22nd. Another break below that zone could aim for the 108.35 territory, which offered support between June 23rd and July 6th. I mean, if the bears are strong enough to overcome that support zone as well, then we could see extensions towards this key territory, which acted as a support, but also as a resistance in the past. And this territory is at around 106.65. Now, in the case we see the Fed not convincing the market with regards to its intentions, and the market stays convinced that that a series of rate cuts are on the table for next year, then the pair could rebound, perhaps from near 110.10, and the rebound could take the exchange rate above 110.95 and perhaps challenge the 112.75 zone marked by the high of July 18th. Now, a break higher would confirm a forthcoming higher high and a trend continuation, with the next key resistance being at 114.85, which is the highs of January and February 2022. Now, passing the ball to the ECB, a 25 basis points hike is also a done deal according to market expectations here as well. So investors will be looking for the guidance regarding the bank's future course of action. Lately, we have seen several ECB policymakers pushing against a September hike, and so traders may be interested to see whether ECB President Lagarde will also adopt a more dovish stance, or whether she will sound again hawkish, dismissing an economic slowdown in the euro area and prioritizing bringing inflation to heel. Now, here we have the euro-pound pair on the daily chart. If ECB President Lagarde sounds a bit more dovish, or let's say less hawkish than it did at the previous meetings, then this pair could extend this slide and perhaps target the 0.8615 zone, which offered strong support here on 10th and 11th of July, but also on the 19th of June. If the bears are strong enough to overcome that support zone, then we will have a forthcoming lower low and a downtrend continuation. So this could open the path towards the 0.8405 zone, or even the 0.8340 territory, which is marked by the low of August 3rd, 2022. Now, if Lagarde appears again hawkish and signals that inflation is the bank's main priority and that more hikes are on the table by this bank, then euro pound could rebound, emerge above 0.8655, and perhaps target the 0.8725 zone, which offered resistance on May 11th, but also supported several occasions before that. Okay, if we see a break above 0.8725, then the bulls will have to deal with this downtrend line taken from this peak here. But for the outlook to be considered bullish, more bullish, let's say overall, they will have to break that line. If they break that line and we see a daily close above that line, then the bulls will perhaps start examining higher territories, with the next one being at 0.8835, marked by the high of May 2nd. Now, last but not least, we have the Bank of Japan decision. Okay, last week we had some comments by Bank of Japan Governor Ueda, saying that there is some distance to go before achieving their inflation target stably and sustainably, also signaling determination to maintain ultra-loose policy. So this prompted traders to scale back their expectations with regards to a policy shift at this gathering, and that's why we had a rebound in dollar-yen. Now, if the bank stays on hold as expected, investors will turn their attention to the new updated inflation projections. And if those inflation projections are revised decently higher, then we could see the yen strengthening on expectations that a policy shift could be looming in the next policy meeting. In such a case, the dollar-yen pair could fall below 141 and come down towards the 137.80 or 137.25 zone, which is a zone that offered resistance here, but also acted as a strong support lately, offering the chance to the bulls to take the rate higher. So the pair could come down, but it will stay above this uptrend line. So even if the yen strengthens, the uptrend in dollar yen could stay intact. For the pair to start reversing that trend, we need to see a break below 137.25, something that could open the door towards the low of May 4th at around 133.45. Now, in case the Bank of Japan does not revise decently up its inflation projections, and also reiterates the view that inflation is driven by import costs rather than domestic demand, then expectations of a shift will diminish further. They will be pushed further back, let's say. Investors will not expect any change at the upcoming meetings, and the yen could decline. Dollar yen could climb up to the 145 territory again. And if we see a break above that zone without any interventions by Japanese authorities, then dollar yen could climb towards this high here at 148.90. So that's it from me. Thank you very much for watching and listening. I hope you have a great rest of the day.